If you're an entrepreneur with a good business idea and you want to implement this in a different jurisdiction from the one you're living in, you have to be careful and check if your country of residence applies a criteria or a principle which is called place of effective management, which means that if you're running a business from your country but you incorporate a company in another jurisdiction, this company is actually a local one and not a foreign one. And if your tax authorities of your country basically find out this, after some years you have to pay back all taxes, all the things that you didn't declare, all the probably VAT that you missed, and all the balance sheets that you didn't publish, with a huge, massive amount of penalties that could screw up completely your business. My name is Andrea Papito and this is Residency.tax. We are a defense team filing your tax audit before even started. We are specializing to build up their case. We build up all the trail of paperwork to help you to prove, if it happens to receive an audit, to prove to be 100% legitimate. In the case that you run your business in another country and you are an individual resident in a different country, or if you have a multiple business jurisdiction structure and you want to make sure that everything is properly confirmed to all the anti-abuse rules. Okay, that nowadays are a lot and we have to be very careful to respect all of them, because the tax authority have all the excuses to hit you back with this kind of penalties, because it's very easy to fail in one of those anti-abuse rules. And it's very difficult at the same time to prove your genuinity, that your business is genuine abroad. Now, the classical situation is when you are an individual that you want to run a business, most likely is an online business, or a business that can be run remotely, and you are the only administrator and the only shareholder, and your country of residence actually applies the place of effective management principle, which means that, as the word is self-explanatory, if the place from which directives, impulse, actions and day-to-day business is done in a different jurisdiction, or in jurisdiction in which the administrator is resident, well, obviously your company that you have incorporated abroad is basically fake. It's not a foreign company, it's just foreign on paper, because the substance and the actions are done in the jurisdiction in which you are living. Okay, and the question is why the local tax authorities' questions will be, why did you open a company abroad and not a company straight in a country where you're living? Why? Obviously because you want to spare taxes, and this is exactly what they think. So here the problem is that if they find out, you're free to do it, but you're not free to pay taxes where you want. So you're free to establish, and this is a quite broad concept, and a lot of people misunderstand that. You are free to establish your business wherever you want, but if your business is managed from a different jurisdiction than the one in which has been incorporated, then of course the business is not foreign anymore. The business is still in the country in which you're living, and then the foreign company is just a fake, just a paperwork. Okay, it's just a document that has been registered in authority where actually where you're supposed to pay less taxes. And then what happened is that after years, the local tax authority where you're living find out this trick, and they will requalify your foreign company as a local one. It's true that now with the more and more amendment of the treaty between the two countries, you could somehow be defended by the country in which you have legally registered this company, because this company might claim that this company actually is genuine in the foreign jurisdiction. Why? Not just because you incorporated, but also because you managed to prove that you traveling all the time out of your country of residence towards the country of the company registration and run your business there. Okay, so these are the exceptions in which you can actually defend yourself from an eventual tax audit. And here in Residency.tax, we help entrepreneurs to do exactly this. We help you as administrator of this company. We correct your behavior, your daily business behavior, in order to make your business itself a defense file. Okay, so when you have to take aeroplane, for example, aeroplanes to go and run your business abroad, what kind of documentation needs to be archived, notarized, and certified, and we help to archive this documentation. And once you have properly collect all the documents, in case of audit, we in Residencia provide to you or to your lawyer or whoever is following the case all the undeniable proofs to be totally compliant with the place of effective management principle. I hope you liked this video. See you to the next content. Bye.